Welcome to the VSA Capital Tech and Transitional Energy Podcast, October the 9th, Thursday. Phil, I think you're sitting at home still. I'm in the office, but it's not quite finished yet. We'll be up and running next week in our brand new office, 42 New Broad Street. Do come and visit us. We're very proud. It's a lovely office. Anyway, Phil, how are you?
Very well, but I have to admit, looking forward to getting back into the office, Andrew. Yeah,
I do want everybody back in the office. Definitely, you lose a bit of momentum when people aren't in the office. But there we go. Right, let's turn to the market. Let's with the big sort of pictures. I think you were just commenting to me, Phil, that everything at the moment seems to be hitting all-time highs. Jamie Dimon has been saying that he's worried there could be a stock market crash. Quite a few people sort of talking about, are we due a stock market crash, and then but are we? I don't know. What do you think, Phil?
Well, we need a trigger for it. Clearly, I mean, when you look back on what happened with the .com crash, there'd been a massive build-up in expenditure in telecoms and lots of VC money into loss-making companies. But a trigger was, one of the triggers was Japan entering recession, and then interest rate rises in the States. But at the moment, we're waiting for potential interest rate falls. But the Bank of England have said that they warned this week of a potential sharp correction with risks tied to AI-driven valuations, which was quite interesting. I mean, if you look at I was just having a quick look at the PE of NVIDIA, and I think it's on something like 30 times PE, forward PE. I'm sure I'll get corrected on that if I'm wrong. But just saw that, TSMC, who obviously are one of the, huge semiconductor manufacturer, NVIDIA's one of their main customers, as is Apple. I mean, they've just announced a trading update reporting September revenue growth of 31%. Year on year, and the figure was higher than Reuters analyst estimates for guidance. So the strong capital spend on AI is still going on, and we haven't seen, until we see somebody brave come out and say, look, we're cutting our expenditure, we're not getting the returns, and customers are slowing down, then we are where we are. There's still strong growth in it.
And I think that's the point. The markets do feel very high, but actually these companies are delivering on earnings. And so the multiples do fall down pretty quickly to levels that are acceptable. So it is quite a tricky one. Not that it's tech or transitional energy, but obviously we do a lot in commodities. And, we're in a massive commodities bull market. It's going to go on for another couple of years. Now, I guess you could have a market crash and still have a commodities bull market within it. But of course, one of the interesting things with gold is, for those that don't listen to our 5-minute morning miner, is we are seeing a lot of cryptocurrency coming into the gold market, which is creating a huge amount of capital and liquidity, which is also interesting. It's a tricky one. You don't want to ignore Jamie Dimon. I think you can ignore the Bank of England. They don't really know whether they're coming or going half the time. But we'll see. Now, the other thing I saw this week, which ties in with a lot of my thinking, I was looking at statistics of EV sales and what percentage of new cars sold in September were EV. Because a lot of people feel that the whole move to EV is slowing down. It's not really happening. Momentum has been lost. But actually in September, in China, 50% of all car sales were EV. Actually, in the UK, it was up nearly 30%.
Yeah, that's right.
The bit that is really lagging behind is the US, which is only at 10%. But you know what? Again, we've talked about this a lot. I've always said, look, 90% of all cars sold in China in the future will be Chinese EVs. I've always said that in Europe, it'll be about 50%. And in America, it'll only be 25% because obviously they're going to be tariffed out of existence. So people would have to pay too much money for them. But the other thing to bear in mind is, these cars, they're models we're just not used to. The best-selling EVs in the UK in September were the Kia Sportage, the Ford Puma, the Nissan Qashqai or something. I can't even mention it. But also, Qashqai, the Jayco 7 and the BYD CU. These are completely new brands, and I think that it's changing, shall we say. It's changing big time. We've been saying this for years, but there's the proof of the pudding.
Yeah, the price points are coming down as well, Andrew. The
Right,
price
the
of
price
these.
points are coming down, the range is going up. And you get in these things, they're incredible. The technology inside them, they are just computers on wheels. It's very exciting, very, very exciting. And of course, the other big new game that is coming along is this, obviously, the recycling of the old EV batteries, which again is very interesting because it's effectively mining. It's like, your old battery is effectively like a rock in a mine, but it's absolutely jam packed full of the commodities you need to make a new battery. And some of these battery recycling companies are becoming really interesting. Again, they're all probably names that people have never heard of. Most of them are private. We're doing a lot of work looking at them all. But yeah, it is quite interesting. Anyway, there you go. Right then, Phil. It's actually a relatively quiet week this week for news in general, but maybe it hasn't been for you. But let's go through some of the sort of stuff that you've been looking at.
There've been a few bit. Well, I mean, you mentioned one this morning. I saw in a mining note, Johnson Matthey, Andrew. And there, I'm only mentioning this in Tech and Trans. But Johnson Matthey, of course, is the automotive. The focus for them, particularly the padding group metals and in catalysts. And what's kind of forgotten as well is in those strong growth, automotive growth, it's not just EVs; it's partial electrification as well. It's in hybrid vehicles, and so I was just going through their results briefly. I mean, as I say, you've covered them. They've disposed of their chemical catalyst business for about 1.8 billion. Just seeing that underlying profits are just, I think, generally, I think they're slightly ahead of expectations. But I was reading through the prior annual reports, and there's a lot of growth, and particularly in the hybrid vehicle market. So it isn't, not to be forgotten in the mix of automotive and automotive technologies. So that was Johnson Matthey. And clearly, the share price is enjoying a very, very good run, and I guess partly driven by that disposal. But looking at companies, I mean, a company called Quartix, who we've discussed before on this podcast, I think it's QTX. It's 144 million market cap, and their shares are up by 91% year to date. And it offers, it's founded in 2001 by Andy Walters, and it supplies subscription-based vehicle tracking software and services, and it has 32,000 customers, primarily small to medium-sized businesses. Clearly, these are very mobile people, and it's all about getting, driving vehicle and driver efficiency. And Andy Walters had left the business in, I think it was 2022, 21, but retired. But his company came back into it in late 23 when his shares had fallen, it had been underperforming. Clearly been turning the business around. They've come out with a trading update for the 9 months to the 30th of September, including the third quarter. Expects its 25 earnings to beat market estimates. Estimating 36 million of revenue, 7.1 million of adjusted profit, and I think it is sat on about 18. I'm just looking to see if it states cash. No, it doesn't. But anyway, nonetheless, ahead of market expectations, and a decent turnaround there in Quartix over time. And certainly the shares reacting on the markets. Another one.
He doesn't
that's
have a
been
brother
through.
called Robert, does he, by any chance?
Well, go on, catch me out in this one. Robert Walters.
You're
What?
clearly not a Pink Floyd fan. All right, don't worry
Yes,
about it.
I
Moving
am.
on.
Right, yeah. Yes, right. Got me on that one. Right, that's Dialight. 95 million market cap. These shares are up by 125% year to date. And this is industrial LED lighting. So it includes sales of industrial lighting systems, but also maintenance repair. They also do signal lighting components for signals. Main markets are in the States. Again, this is a business that's been going through turnaround within the last couple of years. They have had a trading update, and they have said, I'm just going through this, that notes ongoing. So it's seen relatively soft demand, and obviously tariffs maybe having an impact there in the States, but nonetheless, it has been reducing its costs and is expecting very strong margin improvement based on those costs. If you look at its results, its June full year results, they settled long-term litigation, they moved from loss into profit, and they drove up their gross margins. And the share price, has been reacting accordingly. So, continuing strong progress there from Dialight. And also, here's one. I don't know if we discussed this one before, Andrew, because it's quite interesting. Can't miss this. It's a FTSE 350 company, Volution Group.
Yeah,
Ticket is
no, I don't think I've discussed it.
Yeah, it's ventilation. And the only reason I'm mentioning this is because, as we know, in the buildings and construction markets, this is a transitional energy podcast, energy efficiency is absolutely critical for new buildings. But because these buildings are airtight and sealed, they need very, very good ventilation to be livable. Volution Group has got 22 key brands in ventilation. Their shares are up by 12% year to date. It's reporting its full year to July. Revenues are up by 21% to £490 million. Operating profits up by 20% to £93 million. But what's interesting in this is that the organic growth was 5.7%, but it made a very large acquisition in, I think it was announced in, just going back here, as in May, and this was a Fantech in Australia, and so it contributed 16.2% to its growth. It acquired Fantech for £144 million. They're a leading provider of ventilation systems in Australia. So yeah, that's quite an interesting company in the, in a way, in the transitional energy space, or certainly strongly related.
Okay.
So there, Volution Group, cybersecurity, which we were discussing last week, Andrew.
Last week, yeah.
Yeah, indeed. Intercede Group, 92 million market cap. They had a strong run up in the share price up to the start of this year, but down 13% overall. And they've had a trading update to September. Now, the company's been around for 20 years, and it's got global customers across government, aerospace, defence, and financial services, as you would expect for cybersecurity. So they do secure registration, ID verification, password security, etc. But it has been growing its business in the US and with US federal agencies. And they've said that their sales in the 6 months of September were £8.2 million, just slightly down from £8.5 million a year earlier. But its licensing revenue has been rising sharply. So that's up by 65% to £1.4 million. So good, it's moving to licenses. But what's quite interesting is its federal contracts in the States. Now, it's said that it's got renewal orders for $3.2 million, including new deals with US energy and defense clients, as well as clients in the Middle East, but it's seen temporary delays in awards in the US federal market. Now, of course, the US, is on shutdown at the moment, federal services. So, not surprising, it is seeing a delay there, but nonetheless, it ended its period with 17.8 million of cash. It has no debt, and it started the second half of trading positively. So it looks like a pause in activity there, and they're maintaining full year guidance. So interesting one, and another interesting one that's seeing a different challenge in a way is Netcall. Ticker is Net, 201 million market cap. These shares are up by 34% in the last 12 months, full year to June. Company's been listed for a good long time, serves 600 organisations from NHS, local councils, and banks. What does it do? It's all about automating customer engagement with organisations. So this is not just when you're calling up and trying to automate that, but it's all of that form filling, all of those applications for services, making appointments in hospitals, but also managing things like patient care pathways and automating those for hospitals. It's all about process automation. Revenues up by 23% to £48 million in full year to June. Recurring revenues are 80% revenue, which was up for organic revenue by 10%. So pretty strong overall. But what was quite interesting in this is that the underlying earnings increased by 17% to 9.8 million, but the statutory PBT fell to 5.1 million. So it fell by 20%. But a lot of this was to do with acquisition costs during the period. So always something to be mindful of and look out for. So there'll be, one-off costs. But the end of the period was 27.2 million in cash. So very well funded for growth.
We like a nice big cash pile. Did you look at Xeros Technology?
Oh, okay. Didn't look in detail. Go on, Andrew. Hit me that one.
We've obviously not been their most their favourite fan, should we say, for quite a few years, as it continued to slump to virtually nothing. But they've actually, it would appear, I think maybe this is one that you have a good look at. They've signed up a sort of top 10 washing machine manufacturer who is actually going to integrate their technology into their washing machines. Now, the price obviously has had a pretty positive move off the back of that. In fact, if you just look at the year to date now, most of this has been recent, it's up 400%. But it's still only 1.775p on my screen in the middle, which of course is significantly lower than the whatever it was 400p that it used to be. Significantly lower. I don't know. I have a funny feeling that maybe the tide has turned here. It will survive. I dare say they may need more capital. I don't know. I don't know what the structure of the deal is. I need to have a look at it. I haven't had a look at it, but it catch my eye. Maybe that's one that's going to really power on ahead. We'll see.
Take a further look at that.
What else you got?
That's it. Those are the main ones I noticed.
Yeah, I mean, to be honest with you, as I say, it has been a pretty quiet week in the market. It was obviously the Chinese Mid-Autumn Festival, which didn't help. Trump obviously is busy trying to win the Nobel Peace Prize and trying to get peace all around the world. So he hasn't been able to stir the pot too much. So we'll call it a day. Very good. And we should be back next week. I'm actually going to be down in Cornwall. So it may be you've got David. We'll just see what I'm up to. All right. Thanks, Phil.
Chat soon, Andrew.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.